Good morning, fellow Forex traders. I'm back from the mountains. Got back yesterday. Sorry about not being able to have any videos. The internet up there wasn't the greatest. But I'm not trading anyway. Like I said in the previous video, don't do the week before Christmas and the week after Christmas. Won't be trading until that's the January the 2nd, because the January 1st falls on a Monday, so the market is going to be closed. Even though the Forex will be open, there's no volume. There have been some movements though because of news from other countries, and as you can see on the pound dollar here, I'll be doing, let me say before I get started, I'll be doing another video tomorrow and maybe Thursday, and that'll be it. And that'll be until probably, the January the 2nd. Unless there's just somebody to ask some questions, and then I'll get back, or if I have to do a video or a live stream to be able to answer those, then I'll do that. And thank you for those who've subscribed here lately. I appreciate that. Those of you who haven't subscribed, if you don't know, I do Forex swing trading. I don't do day trading, even though there at times there could be a possible trade during my session, which is the New York session, Eastern time here in the US. So if you haven't subscribed yet, please do. You're also, if you do subscribe, just click on the bell. It'll notify you when I have a video, and that's the easiest way to do that, and the quickest way actually too. I'm still looking, possibly I'm waiting for more response. I'm going back to doing live streaming, which I'd done for about a little over 5 weeks, but because there was no response, my time's valuable just like your time's valuable, unless others comment in the comments section under the videos when you look at them, about to bring it back. Let's have a good response, then I will bring it back. I'm willing to do that, give up my time to be able to help people learn how to trade, as I've done this since 2007 just on the Forex. I don't do stocks, don't do options, futures, none of that stuff. It's just strictly the Forex. So if you're looking for those, that's there's others on YouTube that trade those, but I would strongly advise don't go with anybody who's trading 1 minute, 3 minute, 5 minute, or even 15-minute charts, because those are considered to be in the average Joe traders that wind up losing 93% of their accounts. So I'd hate for you to get stuck in that and lose your money or most of your money and then not be able to trade anymore. I do low risk trades, so you're going to be able to continue to trade. You're going to be able to eat, pay your bills while you learn. Just don't put everything into one trade. Don't ever do that on anything, because that's gambling. And there's a lot involved in this. Looking, because I'm patient. I have to wait, like there's a trade set up. I have to wait for these. Then the sell signal. I have to wait for these, so they don't show up all the time, so I have to wait on them, so I have to be patient. So that's not gambling, because I'm not trading every day. Sometimes there is a trade on, because I look at 13, 14 currencies. There may be a trade on one but not on the others, and then vice versa. There may be a bunch of trades on several and then a couple none. So I just have to be patient, wait for the setup, and that's what you have to be able to do. You get paid for waiting in this business, not for, you don't get paid for trying to make 100 trades in a week, because that is gambling. You have to be patient. You get paid, so when you're patient, this is the result. When you get in, it goes sideways. You could have got in anywhere in here. That's your stop. That's the best. When it poked up to there, that really made a low risk trade. That's 127.90, the high of that candle, and the high of your stop would have been 127.93. So you'd have had 3 plus 3 on the spread. You'd have had a $6 risk. A $6 risk. A cup of Starbucks coffee, if it's that cheap, $6. And your patience was rewarded by that. and that low actually went down to 126.55 from 90, so it was 140 pip move. If you stayed with it, which you were able to do, because it came down when it flushed down, started flushing down, made the lower low right there, you were able to take off half, move your stop to break even plus a couple of bucks. And when it made its retracement and then made another lower low, then you were able to bring it all the way down here. Now your second half made more than your first half, which is the whole point. But then whenever you get in this where it doesn't do much of a sideways move, I mean like this, and then starts creeping up, then you have to decide where you want to be able to move your stop. And the best bet would have been right here, where you would have got stopped out right there on your second half. But look how much money it would have made from here down to here. Now you could have took it out because that was support when it touched right in there for the day. It was just for the day that was support. So if you got in there, then you even made more money on the second half. But that's the strategy in a nutshell. That's what I do. But I have to be patient. I have to wait for my signals to show up. If they don't, I can't trade. I can't take the trade. I'm not going to force a trade. So a lot of people don't like that kind of trading, but it's been profitable for me. I've been able to retire, and my wife retired doing this type of trading since 2007. So I'm going on 17 years of being profitable doing this, and I don't change what I do. So, but that's totally up to you. I mean, there's a lot of people, and you can tell on YouTube that want what I call gunslinger action, where they get trade on 1 minute, 3 minute, and 5 minute, and they got to have a bunch of trades every day because they feel like they got to make so much money every day. Well, you can see what I make when I got this trade. I missed this trade because you see that big candle. The risk to reward was too great, so I'm looking for an eventual pullback back down in here to buy. And there probably could be a possibility of a sale if it comes back up into here. A low risk sale again, possibly like $6 or $8 is all you're risking. Because if it takes that out, then it's a good chance that it's going a lot higher. So that's on the pound dollar 1 hour. This is the 4 hour, and there was the sell opportunity. See, there hasn't been a buy opportunity yet because this could be just a retrace, because there hasn't been a buy signal. Oh, well, let's see. Let me be able to scoot it in. I know 4 hours, they're longer term buys since back over here, which was October the 4th. So you were still in that trade because it's a long term trade, and now it's in a sell. Finally. And that's what I'm saying. If it pushes up into here, could be another low risk trade. It may not go as high as that candle, but could go close to it, and it's still going to give you a low risk, because if it takes that out, then it's going higher. And that's on the 4 hour, and that's the 1 hour. So now we're going to the 1 hour on the Aussie, and it has made a 1 hour sell on it after a big up move. And let's see if we can go back to it, because it's been in an up move for a little bit. Back on what's the date? That's the date. December 7th. So on December 7th, it's been in a uptrend. And again, here's the see how it runs away here. You wait for it to come back to give you a low risk trade. There was your opportunities in here. The low of that candle. Why is this not there? Now maybe I'll be able to see it. The low is 65.40 basically, and the low of this candle was 25. So that's 15 plus about 2 something on the spread, about 17.5 bucks. If you got in on any one of those 3 candles right there, that one, or that one, about $17. And you see what happened. Took off to the moon. See if you got in anywhere over here when it took out that high. More than likely you're able to take half off on this. On the Aussie dollar it's 30 because it doesn't have a big range. That was a news candle, of course. But it was in your favor, and then when it pushes up, when it makes a big candle like that, you have to move your stop up. And instead of being up under here, you want it above here, because it's going to retrace a bunch of that. When it does come back down, it's going to fill in some of that. But while it was pushing up, retrace, push up, then you can move it up to here. Kind of went sideways, didn't take out any highs. It flushed down here, but still didn't stop you out. And then finally it made a higher high. Then you're able to move it over here. Made another push down, made another higher high. Then you're able to put it over here. Now you may get stopped out because we got the start of a sell. That's on the 1 hour. The 4 hour is in agreement, and now it is making a 4 hour sell. This ends in 3 hours and 45 minutes basically. So there's nothing to do on this unless you want to get in on the 1 hour candle. The 4 hours got over 3 hours to make that candle, and that can change. So you have to wait on the candle close on that, because you don't know how it's going to close, because it could affect the 1 hour too, because it's already made its sell signal. On the pound CAD, it wasn't in a down sell. It has made a 4 hour buy. You had 3 candles to get in right there before it took off to make a low risk trade, and now you're in the money in it. Let me switch to the 1 hour. There was your opportunity. It started to run up, and after that candle it made us run up, then come back down and push back up. You had an opportunity there, or even any of these two to get in, and you're in the money. The sell the same way. Like I said, I have to wait on these. These don't always show up, so I have to wait on them to show up. And see, there's a buy there, your little poke down, second opportunity. There's a push up for the big money. That would actually be 168.80s to 171, so that's 200 and something pips, that move right there, and that's just on this currency. So if you catch that one too, you've already in it, took off half your profit. The second half has made more money now because you've moved your stop from down here to up here, and now you're just looking for another push up after it goes sideways or maybe a little bit lower and makes a higher high. Then you can move it up to there. Just follow it. That's on the pound CAD. The pound yen, there was your buy opportunities. Now made a 1 hour sell with a low risk trade right in here, but there could be a retrace because that's a yearly pivot line right there, that orange, so it could push down into here before it goes higher, and that could happen today. So even though it's made a 1 hour signal, you have to be careful. See, on the pound yen, the buy, see, you had several opportunities for low risk trade right there on the 1 hour, and then there's your big move, and you're just moving your stop, but you're actually still in this. If you know how to be able to move your stops up, maybe it's got to take out the highs for you to continue to be able to move. Like when it made the push down here, because there was no place your stop had to be down in here. If you got down in here, you had to move it up. It pushed back, and it moves back up. You move your stop to there, pushes down, pushes back up. Now you move your stop to here, but when it makes a big candle and a retracement, your stop should be right there. But now you've had 3 huge candles, so you're expecting a retracement probably back down into here, so it could stop you out. So because the resistance is up in here, you might want to think about closing the position, because you've already made pretty good profit on it. The 4 hour, this is what it looks like. The same thing, the buy, but see, you didn't really get a chance here. The risk on this one was 179.79, and that low was 178, so that's 140 pip risk. It's too great. See, your best bet was the 1 hour. Right in here, you had plenty of opportunities. Even there, you could have got in. That low was 178.90. That low is 178.33. Well, actually that's 56 pips, so that's too much. So any of these candles, that one, even that one, or that one, you could have got in. If you didn't, you missed it. The risk was too great. See how this is too great from down here, because that's where your stop would have to be when you got in. So if you got in where you're supposed to, the risk to reward was a lot better. And that's the pound yen. So we're going to look at the Euro New Zealand. It came back to the buy that it had. There was a sale. You had several opportunities. It went sideways to make a low risk trade, and it sold off. The buy, you had a couple opportunities right there to get in for the buy. It retraced back down to the buy to make another low risk trade to get in, and you've actually made some money, but it's just kind of gone sideways the last 12 hours. So that's usually not a good sign. It needs to make another push up and come back up into here if you're in the buy. If you did get into here, that was your stop. When it made the push up, you took off half the position and you move it to break even plus a couple of dollars on your second half. So now it takes the stress off. That's what it does. You don't have to look for another trade. You don't have to force a trade. You're in the trade. Now you're just monitoring your trade. And now you just need it, as it's gone sideways, now you need a push up, not a push down. So if it pushes up and takes out that high, now you're moving your stop somewhere down in here, from here. So now it's made just as much money as your first half, which is this is what it's supposed to do. Let's see, on the 4 hour, there was the buy. See, it ran away there. You probably didn't get in. And there's the retrace for you to get in. And now it just needs to continue moving. It did push up some, enough to give you half profit. Still the same sideways move. Need a movement on that. Pound New Zealand, the same picture. There's the buy. There was the sell. That was your only opportunity to get in. Those are too great a risk. There's the second opportunity to get in on the short, and you see what happened. This is the 1 hour on Pound New Zealand. There was your chance to get in on the 1 hour. Low risk trade. So you have to take them. It may not work, but if it does work, look what happens. If it doesn't work, you don't lose any peanuts. That's what you lose. Cup of coffee, Starbucks coffee, maybe a Big Mac combo meal at McDonald's. But that's the reward for being patient. And you could actually got back in the sell after being in the buy, because you would have got stopped out after moving your stops up following these. And then it sold off again. You just monitoring it down. There was a place to move to stop. There was a place to move to stop. Then there's a flush. Now you have to figure out, okay, now from all of this, where do I get it? Because there's really no retrace except for a little bit right there. But even then, the second half of the position is made a lot more than the first half of the position. But it came back into the buy over here, and that's what it's trying to do now. You took off half the position, it come back in with your stop at break even. After this flush up took out the high, now your stop's up underneath here. Now if it goes sideways here and pushes up, then you can move the stop up into here, and the second half is now made as much as the first half. Which, if it's in this strategy, if that works, that's what it's supposed to do. Excuse me. New Zealand yen has made a 1 hour sell signal. This would be your opportunity to get in now, but the yen's been pretty weak yesterday and today. So there could be, see, replace again, it's the yearly pivot. There could be a push down toward in here, then it would go higher. But see, when you got these kind of wicks, more times than not they get filled in and sometimes taken out, the low. So just remember that as a potential for it to come down into here, which would be, that's 100 pips away. So you don't want to give up. If you're in this trade, don't want to give up the profit on it. Let me look at where the 1 hour, there was a 1 hour, that was a news candle, I remember that. But there was your poke down low risk trade. You go long, you made money, you wind up getting stopped out. There was your second opportunity as it came back into the candle, low risk trade, and you made even more money on that trade. But you have to be patient on these. You can't force a trade. You have to sit back and wait for it to come to it. You can put in an order down in there, and it may or may not get hit. Just giving enough space where the risk is still low, because if it works, it won't matter if you miss it by a few pips, because there's a result. The 4 hour, see, there's a perfect scenario here. If you didn't get in through there, it ran away, but it retraced, gave you a chance to get back in. Now it's gone even higher. But again, patience. You have to wait on all these. Let's see how this one did on the 4 hour. Really, I mean, if you didn't get in on that second candle right there, it just ran away. That risk is too great right there. So I got a feeling this thing is going to push back up into here for a sell, low risk sell. That's what I would be waiting on right there. That won't happen today though, because New Zealand yen is made just about its average. So there could be a retracement down in here, then a push up tomorrow. It looks like the Santa Claus rally is underway, even though we didn't have one last year. That's the New Zealand yen. The Euro Aussie kind of gone sideways. There was the buy. If you didn't get in down here on this candle, it ran away, made the pullback, gave you a second opportunity there or even here, and now your half a position's been taken off, and your stop, if you got in down here, was originally over here. Now it's here because it's made a higher high and it's pulled back down, and now if this thing pushes back up and takes out that high, now your stop is over here, the second half of the position. And depending on what kind of candles you get on the 1 hour, will depend on where you can move it to, so you got to keep an eye on that. The 4 hour Euro Aussie, same picture. You really didn't get a chance to get in on the 4 hour. It ran away. There was your pullback. There's your chances to get in, low risk, and now you needed to push up, but you've made money on it. The Euro CAD 1 hour, there was a sell on it. You had a couple chances to get in, low risk trade. You moved down. When you get a big candle like that, you kind of have to decide, you needed to take out the lower part of it when it retraces like that and dives down, because then you can move it from up here down to here. And when it does this, then you have to decide, okay, when it drives down here close to support, do I get out? Go ahead and take the rest of the position off. And if you didn't, you got stopped out somewhere in here, or maybe in here if you had it up in here. And the 4 hour, there was your only chance to get in a low risk trade right there on it. And Euro CAD 4 hour, you're looking for a move up to here for a sale, because you really didn't get a chance to get it. The risk was too great. So there could be a move up into here for a sale opportunity on the Euro CAD, but that won't happen today. The pound Aussie made a buy. If you didn't get it down in there, it ran away, but it gave you a second. It always does. It gives you a second opportunity if it kind of runs away. Gives you a low risk trade to get in down there. With this move up, that was easily 80 pips. On the pound Aussie, it's 50. That's where I take it off, because the daily range, the first half, you were able to move on the push up, would take off half the position, then you immediately move your stop loss, which would have been for here if you got in here. You move it to there plus $1 or $2, and then it did poke down, but you didn't get stopped out. It didn't come down enough, and now it's made a higher high, so now your stop's over here. So if it goes sideways a little bit and then pushes up, then you're going to be able to move it over here, and now your second half has made as much as your first half, and the trade should be able to work. But if it continues to push down and stops you out, then chances are this is going to get taken out too, and it'll make a lower low. So that's why you move your stops. The 4 hour, there's your runaway. No chance to get in on the 4 hour. But there's your second opportunity to get in, and now hopefully it's going to work, and it's going to take out this high and come back up into here. But like I said, this won't happen today either. The CAD yen has made a 1 hour sell. You got a good opportunity on that poke up, low risk trade. If you're not in that, that's a great opportunity because it's very low risk. Because it hit resistance up there at its yearly pivot right there and bounced off. So and there it's got one of those wicks too, so it could pull all the way back down into here or even take that low out. The buy was over here. That was on news the same day. And there was your poke down, and it kind of ran away, never gave you another chance. Come down, gave you a second opportunity, and went higher. These are how these work. 4 hour, there it was. If you didn't get in there, it ran away, you missed it. Come back, gave you the second opportunity, and there's your money maker. CAD yen, you can see the patterns of this over and over and over. Euro yen is in a 1 hour sell. It's a low risk trade for it too. It's got a little ways to go. That's a yearly pivot, so that kind of looks like that's where that's heading, doesn't it? That's a magnet. Now it's made a big move today, so it could be a retracement in here. There's that candle again. It could be a retracement before the move higher, so just be careful. Where was the buy? There it is. There's the buy, there's the poke down, there's the second opportunity if you didn't get the first one. But again, you had to be patient. See, that's from the 8th of December, and then you had to wait until December 14th, so 6 days, almost a week you had to wait. So that's where the patience comes in. But when you are patient, you get rewarded. Let's go to the 4 hour on this. Yeah, if you didn't get on that one, it ran away, you couldn't get in. There was your second opportunity, and it's already made a higher high. Like I said, the daily range has almost been reached on this, but that's looking like a magnet to me. But what's on the bottom side? Okay, we're kind of stuck in the middle, so this could go either way because there is time for it to get to that or get to that. But that, again, that won't happen today, neither one of those. So, and that's the euro yen. And lastly, the odd yen has made a 1 hour sell signal, just like the euro yen has. And let's see, there was a buy, one on the same news, it poked down. That was your chance to get in. That second poke down was too far away. So if you didn't get the first one, that low is 93.72. That low was 95, so that's 130 pips. So the risk was too great. Even though it worked, you would have had to got in that, and you'd have probably got stopped out. Moving your stops, because you'd have been, when it made that high, your stop is right there. You got stopped out in here, and that poke down was not enough. The risk was too great. Way over 100. I don't take those, even though it does work. So we'll look at the 4 hour and see if it may have given us a better opportunity. There's the 1, there's the 2. That low is 94.55, and that low is 93.72. So 55 and 72 is 28. So that's 83 pips. Even though it's worked, that's still too much. Sometimes I miss those because I have to go by my risk reward. I would have needed it to pull down into here to get in, but it didn't, so would have missed that trade. So that's all for today, guys. Hope everybody has a good rest of the day. If you're in any of these trades, please monitor them, maybe your stops. because the volume, as every day goes by this week, it's going to die off, and then it's really going to die off next week, Christmas week leading up to New Year's. So just be very careful. Like I said, we've had some movements because there was some big news in the other countries overseas, and that's what's kind of moved these this week so far. But I will have another video tomorrow and maybe even Thursday, but that would be it until the next year, unless somebody messages me on the comment section and asks questions and for help and stuff like that. I'm willing to come on or answer those, or if I have to even go to a live stream where they can chat in there and I can get their responses faster and be able to answer their responses faster, I'll do that. So, but it's just all up to you guys pretty much. So I hope everybody has a good rest of the day, and if you haven't subscribed, please do for me. I'm not trying to get Taylor Swift subscribers. All that does is tell me there's people that's interested. That's it. Because I don't tell people what I eat and take pictures of it and just have everybody got to follow every minute of my life as to what's going on. So it's just about trading for me. It's not about all that other stuff, because most of those on YouTube are trying to get paid by YouTube. But I make my money by doing this. I mean, it's not got the measly little money from YouTube. If you get it and you get enough subscribers and likes, that's great and wonderful. If you don't, that's great and wonderful too, because it's about teaching people to be able to trade, not the other stuff. Because most of those, if they're making enough money, then there's no need to even push for all that, to get somebody like. Because I've seen several guys on there that's, when they said, if we don't get up to 500 likes, we're not going to put a trade call out. Why would you do that? I mean, that tells me it's more about them trying to get the numbers than it is for them actually trying to teach people to be able to trade. And that's what I do. I'm not entertaining, but I don't like hearing myself talk. I'd rather have other people on to where I can, have them bounce stuff off of me and I bounce stuff off of them, and we have a good time with that. But I'll see you guys with Monday. This video will be posted here in about 30 minutes or so, and we'll have another one for tomorrow, so we'll see you guys tomorrow.